as to why, as you would imagine, it's either too expensive or, the big one, I'm not in a flood zone. What do you say to that?
Well, let's clarify something from the beginning. First of all, every home is in a flood zone. If you're on top of a mountain, you're in a type of flood zone. What you have to be worried about is what I refer to as a required flood zone or a high-risk flood zone. There are two of those in Hampton Roads. One starts with the letter A. So if you were to look at a flood map and you saw letter A, that is a high-risk required flood zone. The other one, it starts with the letter V. And again, if that is a very high-risk flood zone. A is rising water. V is storm surge. So V would be in areas like Chicks Beach, Outer Banks, Sandbridge, etc. A is areas like around Hampton Coliseum, southern Chesapeake, Largemont. A lot of those areas are in the A zone. So when you are in what I call a required zone, what that means is that if you have a federally backed mortgage and you are in a required or high-risk zone, you're required by law to carry flood insurance to cover that mortgage.
Okay. Now, say that we've had numerous storms here, most recently Matthew back in 2016, where a large chunk of Virginia Beach and other parts of Hampton Roads too saw some major flooding. A lot of houses that were not insured from flood received some major damage. How do you go about planning out the future? How do you go about buying a flood insurance policy?
Okay. Well, first of all, if you are buying a flood insurance policy because you are in a required zone and you have a federally backed mortgage, the mortgage companies are quote-unquote the police officers of the flood insurance industry, and it's their job at time of closing on a real estate transaction to do what's called a zone determination. And when they do that zone determination, if the property, or rather the structure, one important differential here is that the property can be in a required flood zone, but if the structure isn't, flood insurance is not required. But if any part of the structure or anything attached to the structure is in the required flood zone, then flood insurance is mandated. So the bottom line is that if you are in a real estate closing, then you do not have a 30-day waiting period, and the policy goes into effect the same day as closing. If you are buying flood insurance that's not connected to a real estate closing, then and you are in a high-risk zone, there is a 30-day waiting period, and then it goes into effect at that point. And then finally, if you are in a voluntary zone, we refer to those as an X zone. If you're in a voluntary zone, the voluntary zone, you can purchase what's called a preferred rate policy, which means that you get maximum coverage with the lowest deductibles, and the premiums are going to be between $450 and $500 a year.
Okay, talk a little bit about the difference. You have options when you're looking for policies. There's the National Flood Insurance Program that we're going to talk a lot more about in just a minute. But you can also go to the private sector and get a privately funded policy.
Correct.
What are the differences?
Well, there are a lot of differences, and we could talk for a long time about the differences. But in a nutshell, the private sector is just now coming back into the flood industry. For a long time, the premiums by FEMA were so compressed that there was no room for profit with the private sector. As FEMA's premiums have begun to escalate higher and higher, the private sector is now seeing opportunity. But they are being very cautious with their selection of properties that they will recover. They are not backed by the state and federal government, so that they're totally dependent upon the wherewithal of their own financial well-being. If they do go bankrupt, then the homeowners are often, or not often, but if they were to go bankrupt, then the policyholders may not have anybody there to pay the claim. However, they're offering greater coverages. They're offering riders that the National Flood Insurance Program doesn't offer. For example, if your home was so severely damaged that you had to move out of your home, you would have to move somewhere else, and some of the riders on the private sector will cover that displacement cost of you having to pay both your mortgage and rent or whatever you had to pay to find another place to live. So there are a lot of variables that go on between the two.
And I think a lot of people think that if I don't have flood insurance, a big storm comes on in, Florence, Matthew, Michael, Harvey, I lose my home, it's okay. The government will, make sure I have money and somewhere to live. What is the average payout, say from FEMA or any other organization? Say you lose your home and it's not flood insured. What do you get? What happens?
The average flood insurance claim is about $42,000 a year if you have flood insurance. If you don't have flood insurance, most of the people that were severely damaged in Matthew, for example, their total payout was about $4,000 a year for the total payout.
So if they lost their home, $4,000 is all they get?
Yes.
So what would flood insurance do?
Well, flood insurance would reimburse them for the cost of the damage up to $250,000. Okay. With the National Flood Insurance Policy, you have two aspects to it. One is coverage on the structure, which is what's mandated by law if you have a federally backed mortgage and you're in a required flood zone. And you have contents. Contents is completely voluntary in all situations, and that goes from $0 to $100,000. So the maximum payout on a national flood insurance policy is, with contents and structures, $350,000.
Okay.
So if you have a house that's worth less than $250,000 and your mortgage is only $180,000, for example, you would only have to buy $180,000 worth of coverage at time of closing.
Okay, I wanted to throw some numbers here. Looking at FEMA numbers, stats, National Flood Insurance Program policies that are in force. We're going to talk about the whole country first and then locally. In 2009, it hit its peak, 5.7 million policies in the country. In 2017, which we had numerous active hurricane years, active fresh water flooding years, it dropped 600,000 policies to 5.1 million. And then locally, as of September of 2017, that's the latest it goes back, in Virginia, there's only 103,000 active policies, and North Carolina has 130. Does that worry you?
And some of that is because of the private sector and entering the marketplace. Some of that is, for example, in Mexico City, Florida, where there are no more homes to be covered. And so there's a lot of different reasons for that occurring. But also, in my opinion, one of the issues with voluntary policies is the banks won't escrow voluntary policies. They're mandated to escrow policies that are required. So what happens is people see, like, for example, Hurricane Florence coming up the coast. They get worried. They call. They want to buy a flood insurance policy. Even though there's a 30-day wait, they execute the purchase. The next year comes around. The policy isn't escrowed. Someone gets a $500 bill in the mail. There's no hurricane out in the ocean. They're not scared. And 82% of voluntary policies lapse. So there's a huge, we're working with FEMA to try to get them to force banks to escrow voluntary policies so that when people get used to a $25 a month charge, they're not going to drop it because it's a monthly fee versus, most people can't withstand a $500 catastrophe in their own life, much less have a $500 bill show up on their doorstep.
Yeah, and that makes sense because you could escrow the homeowner's insurance that you normally do, and property taxes and things like that.
So the banks will escrow anything that's mandated, but they won't otherwise because there's expenses to that.
All right, interesting. So say you have let's talk a little bit about cost now. Say you have a $300,000 home. You are not in a flood zone, technically, right? But floods don't only occur. Not in a required flood zone. But as we know, floods happen outside of flood zones. They're not held within borders. How much are you looking at to insure your home on a flood insurance policy for a $300,000 home not in a required zone?
Not in a required flood zone. Again, it's a voluntary policy. It's going to be a preferred rate policy, and the premiums are going to be between $450 and $500. So, with Harvey, almost 80% of the homes that were destroyed in Harvey were not in a required flood zone. If you look at the studies that have come out of Old Dominion University and other places, if we ever get hit by Cat 2, most of us are going to be in canoes.
Right.
If we get hit by Cat 3, all of us are going to be in canoes. So, in my opinion, unless you have a house on top of Mount Trashmore and you live in Hampton Roads and you can afford $500 a year, you should buy a flood insurance policy. My question always goes to people, would $500 less next year change your life? And most people say no. And I said, would losing your house change your life? And they say yes. So it's one of those questions that is very simple, but again, getting people motivated to buy something that's not enforced is just something that's difficult to do.
And how do you get past that mentality of people saying, I've lived here my whole life, it's never flooded, we've never gotten hit by a Cat 2. Last year with Florence, perfect example here, when it was sitting out there in the middle of the Atlantic, the big discussion within the meteorology community is we look back at climatology. In that position, it has never come due west and hit the East Coast. It's never happened. It can't happen. Look what happened.
Right.
You were talking about New Bern a little while ago. Talk a little bit about that, about people living in that area, how much of a wake-up call Florence was, and that could easily happen here.
Well, first of all of you out there, if you want to call in and say, I've never flooded, it'll be and offer me $1, I can retire because I hear it all the time. I think flood insurance is more and more about the future. It's not like a driving record where they look at your past and see speeding tickets and other issues and say, this person doesn't know how to drive safely, we're going to charge X. And flood insurance, they're looking at what is happening with sea level rise. They're looking at what is happening in Hampton Roads with the landmass sinking. They're looking at issues like the Gulf Stream slowing down and pushing water on top of us. They're looking at the warmer water in the Atlantic and the size and scope of the storms that are hitting, and it's a trend. I mean, Michael went from a 1 to a 5 faster than any hurricane in history. Yep. Irma was a Cat 5 longer than any hurricane in history. Harvey dumped more rain than any hurricane in history. And so you can see there's a trend that's
all within the last 5 years.
All within the last 5 years. So this isn't, I don't consider this an anomaly because of what is providing the ability for these storms to grow in geographic size and strength. And so we haven't been hit really by a major hurricane in almost 100 years. We've had some nor'easters. Norda of 2009 probably caused more flooding than any major other storm. Isabel is probably number 2. But the things that stimulate flooding are changing. You take areas like Ghent and Larchmont, all it takes for a flood is a full moon, high tide, northeast winds, and rain. And the water from the bay and the rivers are going to get pushed up into the drainage systems. The rainwater is not going to have anywhere to go. And it's amazing how quickly this all takes place. It takes place in seconds. And the next thing you know, the water is up to your door handle and you're stuck.
Right. Right. And, I mean, all excellent points that it's not just hurricanes that bring us flooding here. I mean, it can happen any time during the year.
Well, one of the things that I like to say to people, often real estate agents will have their clients call me because they're moving to Hampton Roads and they're starting to get freaked out about the flood zones and everything. And my position is that if you don't live in a required flood zone in Hampton Roads, you probably live right next to one. And these storms don't know where these lines start and stop. And so I would much rather have a higher structure in a required flood zone than to have a low structure in a non-required flood zone. Because either way, you should be paying for flood insurance, and that higher structure premium, if the structure is compliant, the premium is going to be about $500. And if you're in a low voluntary zone or a low structure in a voluntary zone, the premium is going to be about $500.
Right.
So it doesn't make sense not to have flood insurance, and it doesn't make sense to be wigging out about where the lines start and stop. It's all about the structure.
Absolutely. Well, Mike, this has been great. We want to make this interactive, so if you have any questions, we are streaming this on Facebook right now. You can put it in the comments. We've had a few so far, Mike, so I'm going to go through a few of them here and see if there's any that we can give a nice answer to. So a lot of people saying they flood due to poor city drainage. That's an issue in and of itself, but that's just another way that we flood around here.
Correct. And some of that's because of older infrastructure, and some of that is because of poor design in newer communities like Asheville Park. So it just depends on the reason for the poor drainage. But more and more, I urge you to look at, from a community standpoint, as far as things like rain barrels, cleaning drainage or the gutters, doing things as a community, planting gardens, things of that nature that, that will soak up water. Impervious pavers where the water can flow through instead of run down into the street. So as a community, there's a lot of things that you can do to help the community become more flood resistant as a whole. The thing that you have to be careful of is if you intend on doing any major landscaping, building berms, digging ditches, things of that nature, please confer with your city planning office first, because the last thing you want is for you to do something to protect your house and now the neighbor's house is flooding. And so the city is all the cities in Hampton Roads are very good at dealing with those types of issues.
Now, Debbie Jones says that her policy is $4,300 a year surrounded by water. It makes sense, right? Mm-hmm. And somebody else here said, thanks so much for this valuable discussion. John Donaldson said this on flooding and flood insurance. My thought is that you cannot afford to not have flood insurance.
Well, I think you can come work with me, and we'll put you back right to work if you have that strong of a belief. The $4,300 premium, when you're, like I said earlier, when you're compliant with flood insurance premium or flood insurance code, your premiums are going to be about $500 a year. So the farther away from $500, the less compliant the house. And it could be because of a mistake on the elevation certificates. We need to talk about those. It could be an admin mistake or an error by an insurance agent, but most likely it's a physical attribute about the house that is causing it to not be compliant with FEMA code. We have mitigated over 800 houses throughout Hampton Roads with tremendous success. And once a house is mitigated, the premiums can be reduced by as much as 80 to 90%. And that's not a stretched number. We have hundreds of case studies in which that fits the mode.
Yeah, talk a little bit more about the elevation certificate.
Elevation certificates are critical to managing your flood insurance program. The elevation certificates are a legal document that is issued by FEMA that is completed by survey firms. On the elevation certificate is all the information an insurance agent needs in order to accurately price flood insurance. A lot of times we find older homes that don't have elevation certificates, in which, by the way, if you have a house that was built basically before the mid-70s and you do not have a current and relevant elevation certificate on file with FEMA, there's a good chance you're paying more for flood insurance than you would be if you had one. So just getting elevation certificates can often bring down the cost. We had a young lady in Hampton who was in the military. She moved here, she bought a house. Her premiums were about $300 a month, $3,600 a year. 3 years later, she received transfer orders, and the listing agent said, you know, you really need to get an elevation certificate. We got one for her. We do process them. And when we got the elevation certificate in, just by getting the elevation certificate, the premiums went from $3,600 a year to $600 a year. So they're absolutely essential. And if you do have an older house before 1975 without one, FEMA can raise your premiums up to 18% per year until you get one. So absolutely essential. We cannot do mitigation consulting without an elevation certificate. We cannot price flood insurance accurately without one. And if you're selling your house, don't assume that because you're paying X, the buyer's going to pay X. That is not the case. There's a lot of reasons why. The house could have been modified by the existing owner, and when a new elevation certificate is purchased by a potential buyer, there's significant differences. I could go on, but do not assume that if you're paying X for flood insurance, the buyer is going to pay the same amount.
Very good stuff to know. Debbie Miller asks, is flood insurance just for homeowners? What about renters?
You can get renters. What you get as a renter is contents coverage. It's the owner of the building that would need to have coverage on the structure, and contents coverage is what the renter would want. Whether it's a commercial lease or an apartment lease, whatever it may be. We often see banks demanding, for example, we have a young lady who opened a beauty salon, and she borrowed $50,000 from the bank to buy all the things that she needed to operate her business, and the bank mandated, because the shopping center was in a required flood zone, that she carry contents coverage in case there was a flood. It would have covered her loan.
Interesting. All good facts here, Mike. This is pretty interesting. All right, we have another question here from, where'd it go? Oh, Sue Williams wants to know, and we talked about this earlier, she might have missed it, but just reiterate on it. Why can't flood insurance be paid through my mortgage, like my homeowners? And we talked about the escrow.
Well, it is if it's mandated that you have to have it. So in other words, again, if you're in a required or high-risk flood zone and the banks are requiring you to have flood insurance to cover the mortgage, it is escrowed and can be escrowed. However, it's a voluntary policy. Unfortunately, most banks will not escrow a voluntary policy because it's not mandated by FEMA that they are required to do so.
Okay. Let's see what else we got here. While I look through these questions, I want to bring up one more stat that we had talked before we went on here. The recent NOAA study that came out for parts of Hampton Roads saying that right now for high tide flooding, there's 5 flood days a year, and that's doubled to 10. And in 2050, it's expected to be 100 days, 1 out of every 3, that there will be high tide flooding. How do we combat that or mitigate that?
Well, there's a lot going on in the various cities. For example, in Norfolk, Norfolk is considered one of the resilient 100. What that means basically is the Rockefeller Foundation has a program, and they selected 100 cities from around the world that are in dire straits for survival for one reason or another. In Norfolk, the number 1 reason is flooding. Number 2 is our dependency on the government for our economy. And number 3 is the discrepancy between the wealthy and the poor. And they have, Norfolk actually has a resiliency officer on staff that is dealing with these issues. So when I started this 8 years ago, there was very little collaboration between universities, city and local, state governments, federal governments, power companies, all these different organizations that are dealing with this issue. More and more we're coming together and comparing notes and starting to come to group agreements or group working with each other in order to start working through how we can fix these things. So, for example, in the city of Norfolk, there's an area called Chesterfield Heights. The city of Norfolk won what I think is a $120 million grant from HUD to mitigate an older historical preservation impoverished area. It was a great project. So we're moving along and doing more and more on how to deal with these issues. There's an organization called RISE that is it's a nonprofit, and they are trying to promote both job growth, company growth, and intellectual property growth in the area of mitigation. They just awarded 6 companies a lot of money to build their businesses in Hampton Roads. Nice. So there's a lot of things going on to help us start learning how to deal with an ongoing problem.
All right, awesome. Those of you just joining us or weren't here for the beginning, we are talking with Mike Vernon of Flood Insurance Hampton Roads. His website, floodinsurancehamptonroads.com, if you want to get in contact with him. Expert on flood mitigation and flood insurance policies here in a coastal area in Hampton Roads in northeastern North Carolina. I want to throw one more question in here, and a lot of people to flood insurance are reactionary. If there's a storm that's out off the Atlantic coastline and so there's some potential of it coming our way, they'll be like, oh, you know what, let me go buy a flood insurance policy. But there is a waiting period. How long?
Correct. It depends on, with the NFIP, the National Flood Insurance Program is 30 days. With a lot of the private sector, it's 14 to 21 days. I actually had a phone call when Florence was coming at us. Governor Northam had ordered the evacuations to commence, and I got a phone call from somebody who actually wanted a flood insurance policy from Wednesday to Wednesday. Obviously, that didn't work out too well for him.
Right, geez. Yeah, and so what would happen if the storm came in and caused damage within 30 days? You're out of luck.
Right. The other thing, too, is the NFIP and the private sector, when the storms are coming and heading towards a particular area, they will shut down flood insurance sales in that area until the danger passes.
Okay.
So a lot of times, even as an agent, if we wanted to process a policy, we can't.
Now, with a hurricane or just a very intense thunderstorm that drops a lot of rain, causes flooding, but there's wind also, how do you go about making that claim? Who pays out? Is it homeowners or is it flood? How do you determine what caused what?
Well, we'll have to go see Judge Judy.
Litigation, right? Yeah.
Yeah, there's a lot of litigation still pending between insurance companies and the NFIP because there is no overlap between homeowners insurance and flood insurance. And let's make that really clear. Homeowners insurance does not cover flood events, and flood insurance does not cover anything outside of flooding for homeowners. So there is no overlap. If the storm hits, there is often an argument whether the wind destroyed the house first or did the flood destroy the house first. And many of those cases, even from Katrina and Sandy, are still in litigation.
Huh. So, in closing, flood insurance is a necessary thing in our area.
Like I said, I'm not objective, and I'm not saying come buy a flood insurance policy from me. Contact your agent, ask them how they can help you and what they think should be done. But to me, it's a lot of risk and not a lot of reward for not having a flood insurance policy.
Interesting. One last question here. Somebody said wind, hail, flooding, 3 different claims, Kim Christie, which is what we said. David Carter says, I am in Norfolk and in Zone B, not a high-risk flood zone and do not have flood insurance. I do, however, have a basement which occasionally floods when this water table rises after a period of heavy rains. Would flood insurance cover that or not?
Okay, a couple things. One thing that I'm a little bit frustrated about that I'd like to see fixed. You have an evacuation zone and you have a flood zone. I wish they had named the evacuation zones something else because people get the two confused. You have A, B, and C evacuation zones, with A having the priority of the people who are most likely to suffer from a flood event and are asked to leave first. There is no way for us to get everybody on the south side to the north side or out of lower Hampton Roads all at one time. So they've created zones in which there is a step process to evacuation. So that is a evacuation zone, and what he referred to as Zone B is an evacuation zone. So, and then you have your flood zones. So the bottom line is, remind me of about the basement?
Yeah, I said with the basement, when that floods from heavy rains, would that be covered by flood insurance?
No, it wouldn't be, nor would any contents in the basement be covered. You have what's called the base flood elevation, and in non-living spaces below base flood. Now, what the adjuster does when they show up, I've been down in New Bern, North Carolina, which got clobbered by Hurricane Florence. I saw tremendous inconsistencies in the claims and the way they were handled. But the bottom line is, from a technical standpoint, contents in basements would not be covered.
Okay. And one last question, then I'll let you go. Somebody, when I did that poll earlier where we had 2,800 respondents and 700 said yes, 2,000 said they don't have flood insurance, some of the reasons why was, I can't get a policy where I live. You say that anywhere you live, you can get a policy.
Yeah, FEMA doesn't turn anybody down.
Okay. So it's not, you just can't get a private policy.
Yeah, private is very selective because as they enter the business, they're being very cautious. And they're not, if your house is below base flood elevation, if you have a basement, some companies, if you're in certain geographical areas or within a certain distance from water, a lot of the private sectors are being very selective as to who they will cover. And if they don't want to cover you, they don't really tell you no. They just price themselves out of the market.
Gotcha. And that's really because, you know, the private industry is funded by investors.
Well, FEMA is a land management organization who has tremendous responsibilities across the board. The National Flood Insurance Program is one of the tools that they use to reach their overall goals of you know, what they're supposed to be doing. Private sector flood insurance is just individual insurance companies providing insurance. They don't have all the responsibilities that FEMA does, and doesn't have all the programs that FEMA has to maintain in order to accomplish the tasks that FEMA needs to take care of.
Yeah. All right, perfect. This is Mike Vernon from Flood Insurance Hampton Roads. If you have any questions for him that we didn't get to in this Facebook Live, you can always contact him, floodinsurancehamptonroads.com. Expert on the topic as a whole. And that's our latest Facebook Live here. Hope this was helpful. I appreciate you joining us, Mike. Thank you so much for taking time out of your day. And Alan, if you're back there, you can tell Brian we're all good to close out this Facebook Live. And thanks for tuning on in today. Really appreciate it. We'll see you coming up in about an hour on 13 News Now at noon.